Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan. On today's show, I want to talk to you about the spring statement. Now, before you switch off, I mean, if you're listening to this, hopefully you're already in the mindset that, this is going to be the topic for you. But quite often these things can be a bit boring in all reality. People don't really want to know what happened in the spring statement. But I think for small business owners, there was a couple of interesting things on it that I want to talk about. And I know it's been a while back, so you might think, well, actually, there was obviously nothing that important if we're only hearing about it now. And to a degree, you're right. But I do think there's some interesting things for the future in here. So it's not going to be a long one, but there is going to be some interesting and important information that I think small business owners should know. So let's get on with it. So then, quick recap. Spring statement, the Chancellor stands up, says some stuff. In previous years, this has almost been like a mini budget and there's been loads of tax changes. So there now hasn't been. So that's the reason why I didn't instantly jump on this and come on and do a show of all the tax changes. Now, the government did say that that was going to be the case, that they were going to keep to it and they would only do this once a year. So from that sense, that's good news. They did keep to what they said. And herein, that's the good news. There was no tax changes for us to talk about. If you want to hear about the previous tax changes, you should go and listen to the previous podcast we've done on this, because we talked about the autumn budget being somewhat difficult for some people in April. I know we did a recent podcast talking about April pains, depending on where you are. And it's those kind of things that you want to listen to if you're interested in, well, what are the main changes. However, buried in this document, there were some points of interest, I'd say, for the future. So depending on the situation, these probably aren't great news for you, but I think it's worth knowing where the tide of change might be going with this. So the main theme of the statement was that the government is looking to continue to crack down and collect more tax on what it calls the tax gap. Now, this tax gap, this missing tax that it thinks is out there in the shadow economy, is quite massive. But the aim is to collect at least an extra £1 billion per year. And to do this, it's announced several measures. The first one is that HMRC are going to receive an extra £4 million in funding to pilot a new programme to improve tax collection of unpaid debt. 4 million extra to pilot whatever this new program is. And in addition, they're getting 600 more staff that's going to be recruited into HMRC's debt management teams. They're the teams that you might have spoke to if you've ever had unpaid debt and you need to do like a time to pay arrangement, something like that. They're the kind of debt management teams. And the aim is that for every quid that they spend on the staff, they recover over £13 of debt. That's their expectations. It'll be interesting to see. So with these two changes, I think that small business owners with tax debts may see a ramp up of pressure to pay. I've seen this happen a few times over the years. The one that always springs to mind is 2010. Doesn't seem that long ago, really, but I guess it is now. After the 2008 financial crash, couple of years it took really for them to ramp it up, but suddenly everybody was getting hammered for tax. Where you might have just got a statement every now and then, now you were getting debt collectors on your door. It was a really big difference. Whether it has that feeling to it this time around, I don't know, but I would just say if you've got debt, just be sure to communicate with HMRC, because normally they're actually pretty easy to deal with. You can normally do a payment plan with them, and I think we've done plenty of videos talking about what to do, and plenty of podcasts and blogs, what to do if you can't pay the tax. But they're actually, they're one of the better people to deal with and do business with and make a deal to make sure. But where they do not like it is if you don't communicate with them, the action can be very, very prompt and very harsh. They will just, like for a limited company, they'll try and wind you up and they will ask for money up front for your next VAT bill and all this kind of stuff. There's lots of powers they've got, and they nearly always only come when you don't actually talk to them. So it's really, really important. If you're overdue by a couple £100 and you're going to pay it in a few days, maybe you don't. But like for these big substantial debts, make sure that you keep in contact with them and do an official deal and ask for a time to pay. They are honestly not that bad to deal with. Now, on top of that, they went on to say that there's 100 million in new funding to recruit a further 500 compliance officers. So these are the teams that investigate people, and they're doing that from like April now. We're talking, they're bringing these officers in. And the idea is that they're going to raise an extra 241 million in unpaid tax over the years. So I think that could see a rise in investigations. Now, I'm not sure that's actually a bad thing in all honesty, because I think we've reached a point where there's not enough scrutiny. And I hate saying that because we've helped clients through investigations, inquiries. They're always horrible. They're always stressful. But we have got this point where you can see on the internet, through our internet presence, people telling me about, I've been doing this for years and HMRC have never had a problem. Because they've never looked. It's not because it's actually acceptable. A lot of the time you read what they've done and you're like, well, it's just clearly wrong. It's black and white. It's in a revenue manual. But because the revenue are accepting it and no one's looked at it, the general feeling is, well, I can continue to get away with it, or not even that. It might just be they think that it's okay. So I think as much as I don't like it, more scrutiny would hopefully help the fairness of the system, because there are, even in our industry, there are rogue accountants out there, and they prey on this. Us regulated accountants, we will do what we can to do within the rules, but ultimately, all the time these other people can get away with it. You end up with this weird thing online where someone says, well, I don't pay any tax, my accountant's amazing. And we're like, well, successful people pay tax. Like, it's a difficult line. So a bit more scrutiny will be better, I'm sure, providing, of course, it's done in the right way. Like I say, I wouldn't wish an inquiry on anybody, but I do think that even going back to where we were 10 odd years ago, where there was a bit more scrutiny on things and it felt like the revenue might look at stuff, would be a good place, because unless people really care, I just worry that too much of the public can do what they want, and there's this weird inequality in the system. And I absolutely believe this tax gap does exist for these reasons, as well as many others. So there we go. Anyway, that's another podcast or video on its own, I'm sure. There was also an announcement, though, about penalties when we're talking about, sounds a bit bad news, doesn't it? But this is all the buried stuff from HMRC. There was news about penalties and thresholds for a system that's not even live yet. So cast your mind back. You might have remembered me talking to you about making tax digital for income tax, or as it's known, MTD-ITSA, they call it, making tax digital for income tax self-assessment. Catchy name. Pretty sure they could have done something with that with their marketing department. But anyway, that's what we are. And the existing plan is that sole traders and landlords with income above 50,000 have to submit 4 digital tax returns a year from April 2026. So as you can imagine, that's pretty soon. We're going to be doing loads of content on this because it's definitely coming now, we've been told. It's been delayed for many, many years. And there's an old video on the YouTube channel you can find where I talk about this in more detail, but where they were originally, the limits have all been moved. Now it's 4 tax returns a year plus a final submission that probably feels a lot more like a normal tax return, but you're going to need software. There's no free stuff. It's all down the road, but we will be talking about it. Now, what they've done is say, look, currently we've set the limit to 50,000. So if you've got income over 50,000, you're going to be, the chances are, and there are criteria to this, you're going to be enrolled in that scheme from April 26. But that actually started really low. I mean, it was like 10K and then it was a different figure. It's moved around a lot, but they're saying that, okay, from April 27, we're going to lower it to 30,000. And for April 28, we're going to lower it from 20. So they've shown the step down again, bringing more people into the regime. And then on top of that, they've said, oh, and guess what? As is the way with us on penalties, we're going to change it. And actually, this does affect making tax digital, but it also affects the current VAT regime. So if you're VAT registered, this is actually still also relevant to you. And that's from April 25, so from now, late payment penalties for VAT and for this Making Tax Digital program that's coming will increase. And they've changed these late payment penalties at various times. So there's a payment penalty percentage they put in at 15 and 30 days and more than 30. And basically they've moved them. So they've gone from like 2 to 3% and then from 4 to 10%. So they've just moved them up. So they're now far more aggressive. So incentivizing taxpayers to pay on time. So if you are going to pay late, I think the takeaway from this is going to know you're going to be hit harder. It wasn't that long ago they've just upped the interest rates as well, because it become really blatantly obvious the best thing to do was, when it comes to not paying something, was not pay the revenue because it was the cheapest. Now they're a lot more expensive when you don't do it. And then finally, if you claim child benefit and you earn over 60k a year, or one of you does, you likely pay the high income benefit charge. And again, I won't go too much into detail about this because you'll know if it's you or not. But if you do, and you have to do a tax return for it, just purely for that, it was confirmed that for claimants or their partners, you'll be able to pay the charge via payroll soon without needing to submit that tax return. So there's going to be a digital service that's supposedly coming from summer 2025 that's going to allow you to do this. But apparently we think at the moment it's only going to be applicable to individuals who are newly liable to the charge. So if you end up going over 60k, one of you in the household, and you're going to have to start paying the charge, you're claiming child benefit, then this may be for you. That's currently the thought process. The reason I'm sort of joking about that is that with many of these things, I think it's a case that actually that could change. The timetable could change, particularly where tech's involved, and it could also start to encompass people that are currently paying. So know that if you are only doing a tax return because of this, there might be a chance that you'll be able to sort it out through payroll via this app in the summer, and therefore you won't need to do a tax return anymore just because of that. But it's still TBC because it might only be for new people. So there we go. And that was it. That was the actual main changes. So while there was no further pain in terms of the tax changes, some of these announcements to me hint at a future kind of landscape and pain for the future, particularly if you get behind with the debt. Now, if you do want to catch up with the actual changes that were back end of last year, check out the other podcasts we've done. Anything talking about April, tax changes, autumn statement, that'll be the one. and you'll be able to get more detailed information there. As I say, with Making Tax Digital, we'll definitely be doing more podcasts on that. I mean, it's going to be one of the biggest changes the industry's seen since probably payroll's been launched. So it'll definitely be something we'll be covering. But for now, just a hint that, it's there, it's coming. There's a pilot live at the moment that people can take part in. And if you are late, there are penalties, surprisingly. So that's where we're at. Now, if you have enjoyed the show, make sure to subscribe via your favourite app. I know most of you find us through Spotify, but as a reminder, we are also throwing these up on YouTube as well. So if you do want to kind of see me talk, whether it's directly to the camera or directly at a laptop, whatever the case may be, what I love about that is that there's a comments there and we can interact with you. On our main YouTube channel, we interact with people in the comments all the time. So I thought it would be cool to be able to have that option if you wanted to. Anything you want to say, go on there. Please do subscribe. It's early days for that channel, but we're throwing them up there regularly anyway. So go with that. So just search HeelanHub on YouTube. You will find it. And if you do have 5 minutes, just giving us a review. I love the fact that so many of you have done it, but just a review on whichever app you find us in really does help that visibility and anybody finding the podcast. So thanks very much for that. We've had some really good interest for cool guests, I think, moving forward as well. We've just got to get the tech in place to be able to do that. And I think that's great when people see it outside and want to be on the show. So thanks very much for that. For more business insight and tax tips, be sure to connect with me and my great team on all the social media channels, including, of course, the main YouTube channel at Heelan Associates, Instagram, LinkedIn, TikTok, Facebook, Twitter, wherever you want, we're there. Hit me up. Love to talk to you on there. And you can also sign up to our 2-weekly HeelanHub Herald, which is an email direct to your inbox with more tax tips and business insight that comes out every 2 weeks. You can do that by going to our website, heelanassociates.co.uk, scroll up and down. And I know many of you do. You can just bung your email in there and we will send you some emails. We don't sell that data. It's purely just to talk to you about information you might be interested in. So go there. Finally, if you are starting your journey in business and you're thinking, or you're not in the digital world at the moment and you do want to get there, we'd always recommend the market leader at the minute, Xero. From our point of view, they're the market leader. And you can get yourself a great deal by going to heelanassociates.co.uk/Xero and you'll get an amazing deal. I think at the time of recording, it's something like 95% off for 6 months. And of course, that could change, but depending on when you're listening to this, but that's currently where it's at. So do go and use that link if you can. And if you want to get in touch about the podcast, obviously you can go to the YouTube channel, but you can also email us at info@heelanassociates.co.uk. That's it. Have a profitable and tax efficient week, and I'll see you in the next one.